Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts, and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Greetings everybody, let's take a look again on the gold market. So recently was significant performance across the board on all markets actually. So even the stock market, on the bonds, and the forex market and gold as well. So you can see downward action continues. So it seems that the common sense in minds of the investors is prevailing gradually upon recent Jerome Powell statement. It was lots of trash talk. That is, everything goes well, consumption is strong, and then unemployment is low, and that should mean that everything goes great. But investors are not stupid people. They see what's really going on. In one of the moments we already talked about many times concerning this consumption and so on. On the ground of this understanding, let's call it in this manner, because currently a lot of banks across the board, including the central bank, starts revision of the inflation to the upside, performance of the risky assets to the downside, stocks markets as well. So on this recent performance, market has dropped. So yesterday we dedicated the video to creating of the more or less acceptable trading plan for taking the long position. Although we have warned you that in general performance stands bearish, and we treat this current action only as a temporal pullback, and the chance of the possible direction stands significant, we still was able to find acceptable way how to deal with the taking the long position. We agreed first that we should not get any bearish grabber here for taking the long position, and we haven't got it. This upper direction was a bit small to form the grabber. Second, the condition was that intraday head and shoulders pattern, although it looks a bit skewed, but in general should stay. And in this case, we could consider at least make the scalp trade for those who would like to do this. So first condition, first moment has been completed. We haven't got any bearish grabber. So gold give chance on the possible upward deep reaction. Maybe today's payrolls will be the catalysis of this action. For example, if they will become slightly lower than expected. Just to remind you, markets expect 396,000 of the new jobs created. On the 4-hour time frame chart, everything goes with the plan. So you can see, indeed, the neckline, as we suggested, should be a bit skewed. It's just because intraday targets was precisely in agreement with this 19 or 690 fib level. Once market hits it, it collapsed. The one thing that is not really pleasant at this point is the too fast drop on the slope of the right arm, which is bad for the hand shoulders. When you have the hand shoulders, I'm talking about this every time, because this is important, you need to see that market shows the sentiment that corresponds to the pattern. So it means that on the right side of the pattern, the bulls should take control over the market. And they should show as a faster upward direction here, as lazy downward direction. It should be very gradual and slow, something of that sort. And bounce up should be vice versa faster. That just gives you the vision and supports the overall performance for the sentiment of the market. Currently, for this sharp sell-off on right arm, this is probably the risk factor for this hand shoulders pattern. Still, currently we have the way how to minimize your loss, and still you would like to, if you would like to, you could try and take the long position, because who knows what we will have on the payrolls report. Simultaneously, since we do not have the bearish grabber, bears could control the performance of these hand shoulders. Once this pattern starts failing, and if market will not able to start upward action, starting dropping lower back into the lows, that will be clear signal that market intends to accelerate down, and that might be the way to act for the bears. For instance, you could try to use again stop sell order, which shows its efficiency, because very often we use this when we expect, and at least when we see the chances that are possible for opposite direction. And here, since will be the hand shoulders fail, it will be relatively safe trying to take the short position, placing stop sell order around previous low, slightly above them. So once market starts breaking it, you'll get the position. Another risk factor here, yes, we have the bullish divergence right there, but at the same time you could see that you also have the bearish divergence right there. So it's also another tricky moment that we have here. To minimize this risk, we suggest that you could keep an eye on this pattern. That will let you to place very tight stop. So take a look what we have. Upward action has been finished precisely at the XLP that we have discussed, and collapse has followed. And take a look what's going on. Market right now stands at the 618 support. That corresponds to the lows of the left arm. And it is forming minor hand and shoulders right there. So you could use the minor hand and shoulders to make a trade with the placing stop slightly below the head. And that will be quite enough. So because if market really bullish and has chance to keep going higher, it should start it to doing this right from there. Any signs of weakness and drop below these lows just tell you that no pullback will happen, no upward action will happen, and market starts dropping below the lows. Bears alternatively also keep an eye if you do not like the idea of the stop selling, or you would like to take a position a bit earlier. You also could keep an eye on these minor hand and shoulders. If you will see the failure of this pattern, that also might become the sign that gold should start keep dropping lower. Yes, payrolls numbers bring some difficulties, some volatility probably might be, and a lot of fake spikes or something of that sort. But what we could do with that? Nothing. So this is just reality environment that we are trading with. If you're ready for that, this is approximately the setups and patterns that you could follow depending on the view on the market and what direction you would like to take part with.